I really don't know what's going on. Uh, it seems to me that this kind of stuff should not be this hard to do, but what I'm finding out is that it is that hard to do. So please forgive me for the, what would it be, 7-minute delay in getting started. I hope you stuck around to see what was going to happen, and we'll get going this morning. We're going to get this more sophisticated as we go along. I've got some new equipment coming on board that'll make the sound a little better and some better lighting. But this has actually been kind of fun because I've learned some new things about what I want to do and how I can do it. But enough about that. Welcome. Today is Wednesday, the 20th of September, 2023. This is the daily live feed from the Red Shoe Business Club, and we're talking about business issues. We've talked about expenses. We've talked about S corps. So what I wanted to do was to pick up on a theme that we talked about yesterday, and that is about protecting assets. My experience is that when most people start a business, they start the business out of the eagerness to make money, out of the eagerness to solve a problem, probably a problem that they've had themselves or that they have helped other people solve. And so it doesn't take long to figure out, okay, if people are willing to pay to have this problem solved, why can't they just go ahead and pay me? And that's good logic. And that's how most entrepreneurs get started in their business. Not-for-profit entrepreneurs should not be forgotten, because sometimes some of the most inventive stuff that happens in business happens from not-for-profit people. But the payback for a not-for-profit is generally the satisfaction in seeing a problem that affects many people being solved, that demonstrates an improvement in the quality of life for large segments of the society, many times for segments of the society that are otherwise helpless or don't have the resources to make some improvement happen. So the logic behind what you do is exactly the same, whether your business is for profit or whether your business is not for profit. And I say it's exactly the same. I understand that some people try to get in business simply for greedy purposes. Those people are gamblers. Those people are drug dealers. Those are the kinds of people that don't really give a damn about anything except the money that they can put in their pocket. Well, I have no problem with people putting money in their pocket, but I want to see people put money in their pocket that they can be proud to have, that they can take the sense of satisfaction to have accomplished. And so that's why I like to work with small businesses like yours to help make their business go better and also to help them save money on taxes. So having said that, which is kind of the justification for what I do in my practice and the reason for setting up the Red Shoe Business Club, because my purpose in the Red Shoe Business Club is to provide resources for small businesses to solve the problems that they have or to solve the problems they want to avoid by having knowledge in their by having the knowledge to allow them to solve those problems. But as I said, yesterday's conversation when we were talking about setting up S corps, we briefly went by the idea that you set up a separate entity to protect your assets. Well, why is that so? Well, in the US at least, and it may be true in other countries in whole or in part, but in the US at least, our property laws are set up so that the owner of the property is identified as either a natural person or as a business entity. Excuse me. As I mentioned yesterday, if you set up your business, when you start your business out, you, a natural person, are the owner of the business and you own everything about it. You own all of its assets, you own all of its property, but you also own all of its problems. And you also are liable to pay out of your assets for any problems that occur. So if you want to protect the assets that you have personally from attack by a situation that arises because of the business you start, as long as you are standing alone as the proprietor of that business, all of your assets are liable for, they are exposed to be taken in any kind of bad situation. So if you set up a company, you set up that company because you say that the operations of this company make it different and special. And because of that, the assets that are in that company are protected and they are owned only by that company. Now, the most common form of asset protection company formation is an LLC. That stands for Limited Liability Company. Limited Liability Company. The name says it all. What it's saying is that what's in this company is limited to what's in this company. And so if there's a loss, if there's a legal battle, if there's a somebody gets injured, if somebody is dissatisfied and sues you, what they can come back and get is limited to what's in that company. This is a powerful tool because what it allows you to do is to be sure that what you're doing continues, what you're doing continues to grow. And as you take value out of that business as your compensation for the investment that you made in it, then that is your compensation. And while it is money that you received from this limited liability company, what you own, what you take out is separate from what belongs to this company. We also set up partnerships which can either simply be called partnerships or which can be called limited liability companies as well. Let me go back. I should have mentioned the concept of limited liability company is governed and organized and set up by the individual states in the United States. The federal government does not authorize, neither does it recognize the erection of any kind of corporate entity, whether it be an LLC or whether it be a corporation. I'm sorry, it does recognize them, but it is not the body that authorizes the existence of those kinds of businesses. The individual secretaries of state in each state are the ones that you register your LLC or your corporation or your partnership with. Now, we talked about S corps yesterday, but the concept of corporation is broader. A corporation is a separate entity that is recognized by the law as a person. An LLC is, as far as the IRS is concerned, is what they call, and now the term slips my mind, it is not recognized as a separate entity by the IRS. As I said yesterday, if you have a single member LLC, it's a sole proprietorship. And if you have a multi-member LLC, it's a partnership. An LLC, I remember it now. An LLC is a disregarded entity. We don't pay any attention to the existence of the LLC for the sake of taxes. So that's why it's important that we come down here, partnerships and corporations, because they're recognized by the IRS as separate entities. And the courts have recognized corporations as separate persons, subject to, in almost every case, the exact same rights and privileges and obligations as a natural person. So if you want the strongest protection for your assets, you want to be in one of these entities, business entities, but the strongest is the corporation. because not only does the corporation structure preserve the assets that are held by that corporation, they also provide other ways for you to deal with the business activities that you're trying to operate there. And that's what the important thing is. And we brushed upon that yesterday when we talked about S-corps. And as we go forward with some of these programs, we'll talk more and more about what a corporate structure does to your advantage at various stages of your business life. There's one other kind of recognized entity in tax law, and that's a trust. I'm not going to try and go into all of the things that trusts can be involved in. You may have heard people talk about a revocable trust or a living trust. You may hear people talk about a family trust. You may hear people talk about a testamentary trust. A testamentary trust is where your estate goes when you die. Whether you have a will or do probate or whatever, according to the law, the moment you die, all of your assets passed into a trust that, in order for the taxes to be done properly, needs to be erected with its own tax ID number and so forth. Most people don't do that simply because there's never enough assets to pass, or what assets there are to pass are generally wrapped up in life insurance policies. And perhaps the kids have to sell mom and dad's house and so forth. Technically speaking, all of those things require the erection of a trust, and I certainly recommend that you do so. But if in your experience that has not happened, don't be surprised, because it happens all the time. And if there's no negative consequences from that, then it really doesn't come to the attention of anybody, either the IRS or the families or other persons. But partnerships, corporations, and trusts are the kinds of entities that the IRS recognizes over and above individuals. So if we're trying to protect our assets and we want to set up an LLC or a corporation, let's just call it the company. And you're going to invest some money, startup costs. You're going to buy inventory. You're going to sell. Which means you're going to receive income. And so as you receive income, as you do all of these things, you have money passing through bank accounts and so forth. And so one of the very first things you want to do, that you have to do when you set up a company, is set up a business bank account. It's a business bank account. It is named, it's in the name of the business, and the only kinds of funds, no matter what you're doing, whether it's investments, I should have said loans as well as investments, things that you pay out or money that you take in, they all need to go into that one account. And everything that goes out needs to be strictly for that business. It can't be for your personal expenses. Well, you're telling me, you're saying, Mike, I started my business. It's just me. I sell widgets that I make in my garage, and I only make a couple $1,000s a month. And, I just don't have a lot of stuff to go on. Why don't I just use my personal account? Because other than buying the parts for the widgets, all I use the money for is to pay my rent, or to pay my utilities, or to take my wife and kids out for supper. Well, what I'm telling you is, right this very minute, to stop doing that, to make sure that the only thing that goes into or out of your business account is stuff that relates to the business. Well, what if you do want to take your kids out? What if you do want to pay your own utility bills? That's fine. It's your money because you're the owner. But in order to make sure that your assets are protected, you need to have a personal account. And you transfer money for those kinds of personal expenses from this account to this account, and then you pay your personal utilities out of this account. That's a lot of trouble. You start whining. I can hear you whining in the background. I've whined myself that way. The problem is, if you're trying to protect the other assets that you have, like maybe your house, car, retirement accounts, it's hard to write upside down when the paper is bouncing back and forth. Okay. Your personal assets like your house, your car, your retirement accounts, and so forth, you want to protect them. You want to build a wall between all of this other stuff outside and these things. But here's what happens. Let's say that one of the widgets you sell causes someone to be injured. And now they have a serious injury. They've got to go to the hospital. They'll recover, but it's going to cost $150,000 to get things back. And, that widget, they would never have bought it. They would never have had it if they hadn't bought it from you. So it's conceivable that that person would go to court and say that you're responsible for their injury and they want the whole $150,000 paid. Well, in order for you to pay the $150,000, you'd have to take some money out of your retirement account. Excuse me. I apologize. Take money out of your retirement account. So 2 things. First thing is you need to have insurance, because I would hope that a good insurance policy would have protected you from that $150,000 loss. But let's say that the insurance limits have been reached, and now there's still another $5,000 that needs to be paid. And so the only place that person should be able to get that money is from the business accounts, because it was the business operation that created the liability. It was the business operation that they were interacting with. They should have no ability to access your personal assets that you have worked hard to create, whether you created them as dividends from your business or whether you created them from careful investing or from things that you did earlier. This stuff is yours. This stuff is the business. And if you're acting this way, then if a lawyer, because that injured person's lawyer is going to be looking at all of your accounts, the court will order you to divulge all of your accounts. And so what they're going to look for is cases when, oh, wait, back 2 years ago, you paid your home electric bill out of the business account. Oh, 2 years ago, you paid for part of your family vacation with a check from the business bank account. We can see it over here in your personal bank account. It's right here. No, from your business bank account. You didn't put it in your personal bank account like a dividend. And when you reported your taxes, you didn't show the dividend that you paid yourself on your business taxes. What does that tell me? That tells me, as a lawyer would understand, that there is no separation between your business and your personal life. I drew a wall here, but what they call it in the court is it pierces the corporate veil. There's a veil that hides the company from your personal stuff or vice versa. And if they can pierce that corporate veil, then they begin to start looking for personal assets that they can do to satisfy the demands of this lawsuit. Now, look, I know that as an honest and moral person, if you felt a responsibility for the injury that this person had, you may well want to take money out of your personal accounts to make sure that their needs are satisfied. You've done everything you should have done. You got your insurance. You've been honest and open with everything. And there'd be nothing wrong with doing that, but that should be a voluntary action on your part. And if you're going to do that, your payment out of your personal accounts should reverse this track and go back to the business bank account. On your taxes or on your books, you would show that as an additional investment by the owner. See, you're trying to make sure that all these things that happen separately from the business itself. You're trying to build this wall between the business and yourself. And as we'll talk later on in some other programs I have planned, if you're going to use this business to increase your wealth, this kind of transaction path is very, very important, because you don't want to have them be able to follow you back and try to show that you're just treating your business money as just an emergency fund for your personal life. So I'm telling you that this is one of the most important things you have to remember when you start a business. When I set up a business for somebody, we do three things. We register with the Secretary of State. We register with the IRS to get a tax ID number. And then as soon as we have those two things done, we take the paper from the Secretary of State and we take the paper from the IRS with the tax ID number, and we walk over to the bank and we say, I want to start a new business bank account. And that business bank account, the first deposit in that account will probably be the $100, $500, $1,000, whatever it is that you take from your personal funds to put into that business bank account. And from that point forward, all the other money that comes into that account has to come from the activities of that business that you set up. That's the third thing we do. Secretary of State, IRS, business bank account. Now, we'll expand on that business bank account idea later. We'll also expand on some other things you have to do soon. But I just want to impress with you today that in order to protect your assets, to keep your personal assets as safe as you possibly can, that's what you need to do. Business bank account, you need the money, that's fine, but put it in your personal bank account so there's a trail. Then you can pay your personal bills. It's as simple as that. Look, if being in business wasn't worthwhile, I wouldn't tell you to do these things. Obviously, you're listening to me today or whenever you watch this, and for you, being in business is worthwhile. And if that's something that you want to do, then you need to do it right. And I'm going to tell you how to do it right. Some of it may sound like it's complicated. There may even be some people that will tell you, oh, poo, you don't have to do that. You'll even find people that will say, well, I haven't ever done that and I've never gotten into trouble. Beware of that conversation, because just because you haven't gotten into trouble doesn't mean that you can't or won't. And again, if you're an ethical and moral person, you don't want to purposefully do things that you know are not legal or right. So listen to me when I talk to you, because these things will be important for you as time goes on. That's it for today. That's all I've got time for. I'm glad you were able to join me. Again, I apologize for getting started late. I'll figure this out eventually. So thanks again, and have a good afternoon.